When it comes to trading options, one of the most common questions is about the delta of your options trades. What is the optimal delta? What's the best delta? For example, selling cash secured puts. What's the best delta for selling strangles, or even with buying options? What's the best delta for buying a call or buying a put? And this is always, if you hang out in any options trading community, this is a common question. And nobody ever really answers it because there's no right or wrong answer here. A lot of people think there is like this cookie cutter answer where I say, hey, yeah, go sell the 20 delta put. The 20 delta put's the one to go sell. And that's always the best one. And there is no such thing as a better or worse delta when it comes to trading. Let me give you an example here. Let me go into my trading platform. Of course, I'm using TASTYTRADE as my trading platform. And let me go sell a standard kind of put that I would go and sell. So let's go to the 44-day cycle. And for me, let the options chain load here. We are in the middle of a trading session here. Let's sell the 20 delta put. And you can see the 20 delta put here is going to give me a credit of $3.10 on a buying power reduction of about $2,900. And for me, this kind of reward versus risk, this is fine. You know, and it's Apple. You know, if the trade goes against me, I don't mind taking shares of Apple potentially at $220 a share. But this is just based on my preferences. When I say I was comfortable with the risk versus reward, you may not be. Right? You may want to get a little bit more reward. You may bump that up from a 20 delta to maybe a 33 delta because you want a bigger credit versus the buying power reduction, which is also bigger, but it's as far as a ratio, it's a better ratio as far as risk versus reward. Or you may think that the 20 delta put that I was comfortable with is still too risky. You might want to go out to a 12 delta. You're only going to get a 179-cent credit. Your buying power reduction is $2,100, but you feel a lot safer because now your probability of profit on the trade is like 90%, where my 20 delta put, you know, I was only getting an 82% chance of winning. And of course, that person that was selling the 33 delta put, he's only getting a 72% chance of winning. But guess what? It's all linear. Now, as the delta decreases and increases, obviously the percentages, your probability of profit, increase or decrease accordingly. And it's all perfectly linear. There's no advantage. You choose the percentage you want as far as the win rate. And, you know, it's going to move perfectly linearly with the delta that you choose. Same thing with the credit. You know, as you go lower in delta, you get less credit. As you go higher, you get more credit, and it's all perfectly linear. There's no way to game the system as far as delta. So all you need to know is, are you comfortable with the odds on the trade? Are you comfortable with the risk versus reward? And with short options especially, you need to be comfortable with assignment. You know, are you going to take assignment? And if you do, are you comfortable with that strike price you chose? So let me run it down how I think about it mentally. So the very first thing when I sell a put or a strangle, which has a short put component, also has a short call, of course, but anything with a naked short put, the first thing I decide is, hey, if the put side of this trade goes against me, am I going to take assignment of shares or am I not going to take assignment of shares? If I'm going to take assignment of shares, should the put go against me, the very first question I need to answer is, am I okay buying that stock at the strike price I chose? If I'm not okay with that strike price, pick a better strike price. And, you know, that really is it. If you're going to take assignment, really all you need to worry about is, are you comfortable with the price that you're going to buy those shares at? So pick a good price, in this case with Apple. You know, if you're not comfortable at 220, you know, I'd really like Apple to be trading at 210 before I buy the shares. Okay, well, move it down to 210, right? You're less concerned at this point with pop and risk versus reward on the trade, especially if you're really wanting the shares. If you're really wanting the shares, it's really about the strike price. So just go to the strike price that you want those shares at. Now, most of the time when you're selling options, you're not interested in taking the shares. So what you need to worry about when you're choosing your deltas is the probability of profit. What are your odds of winning on the trade? What are the odds you want? For me, I like winning somewhere around 80% of the time on my trades, at least 80%, and 80 to 90%, somewhere in that range. So knowing that that's the probability of profit I want on all of my trades, what deltas make sense? Well, this 12 delta put that I'm sitting on, probability of profit 90%, that works. And the 20 delta was at 82%. That works. And then there's a strike in between them. The 16 delta had an 86%. Any of these three strikes work. So those three meet that criteria. Probability of profit looks good. The next thing is risk versus reward. Am I getting enough credit versus the buying power reduction on the trade? Typically, I need to get at least a ratio of $1 credit to $10 on the buying power reduction. So a 1 to 10 ratio, right? So in this case, where I was doing the 20 delta put, $315 credit versus a $2,900 buying power reduction, that's right in line. That's about where I want. I don't want a worse ratio than that. So if I start going further out of the money here, if I go to the 16 delta, now I'm getting a $239 credit versus a buying power reduction of $2,400. That's essentially 1 to 10. So I could do that, but the 13 delta, now we're getting, it's a little less attractive because I'm getting a 180 credit versus a $2,100 buying power reduction. So for me, I'd probably do either the 16 delta or the 21 delta based on what I want for pop and also what I want for risk versus reward. So there you have it. That's how you think about delta, right? It's all about, if you're going to take assignment, pick a strike price you're comfortable taking the shares. If you're not going to take assignment, then pick your odds, pick the probability of profit that you want, and then pick the risk versus reward you want. And that's it. So there's no magical formula to delta. There's no right delta, like a universally accepted, this is the right delta everybody should be trading. And if you're not trading this delta, you're a losing trader. No, but there's no better delta. There's no worse delta. There's only the right delta for you and what you're trying to accomplish in your trading. Now, I know, having said all of that, there are going to be some of you brand new options traders that are going to be totally disappointed with that answer. You got to figure out what deltas work for you based on your personality and trading style, your account size, yada, yada, yada. And you're going to be like, DT, just tell me a delta. Okay, so if you're brand new and you want me to just give you hard and fast numbers, I would say when you're selling puts, for me, I like selling, somewhere between 15 and 25 deltas, right? Because that's going to give me about an 80% chance of winning as far as the pop, right? So 15 to 25 deltas, anywhere in that range, start with that, right? On strangles, I like selling 16 deltas on each side. That's my go-to. I go to the one standard deviation move on each side. So that's somewhere around the 15, 16 delta mark on the put and on the call side. So there you have it. That's my short put and that's my short strangle deltas. But again, figure out if that works for you based on the percentages you want and the risk versus reward that you want. Now, if you want to learn more about options trading and especially my favorite option strategy, which is the wheel strategy, check out my book, The Super Wheel Option Strategy, which is available on Amazon. You'll find a link to this book in the description below. Also, join the DT Options Discord server. There's a link to it in the description below as well. I hold a live voice chat there each and every trading day in the morning for the first half hour or so that the market is open. You guys get to see my trading platform, all the opening and closing trades I make, any rolls that I make that day. And we've got a nice little trading community over there, and we'd love to have you as well. Peace, guys.